I bet the title of this video stressed some of you guys out just a little bit. So let's just take a second and breathe. It's gonna be okay. Now, we are gonna talk about the downside here that is coming for AMC, exactly what is happening today with institutional investors that are selling out of their AMC positions. This ultimately is going to be a great thing. We have a chance to acquire more legal shares and to drive the share price through the roof, to the moon, to Pluto, whatever you guys want to call it, when the Moass actually does happen. So this is not shorts covering. I actually think there's a lot of shorting happening today, as well as a lot of other key things that we need to talk about here in this video. We're going to go over the base case scenario, what I think is going to happen, worst case scenario, and best case scenario. So let's get straight into this video, guys. Hit that like button for me. Consider subscribing to the channel. Let me know down below in the comment section, does this information make sense to you guys? Do you agree? Do you disagree? Let me know your thoughts on this, because you are a part of this community and your opinion, your information is very valuable to me at the very least as well. Also, check out the pinned comment down below for the link for the buy and sell alerts and the link for my Twitter account, and check out the link in the description for Public. They do not use payment for order flow whatsoever. Sign up with them in about 2 or 3 minutes, get up to $1,000 in free stock of your choice. Get Peloton, Beyond Meat, Disney, Apple, Google, Spotify, whatever you guys want. That is down below for you guys. I actually bought a lot of AMC over there today. Now, let's get straight into this video and this information. So what is going on with AMC today? I think it's pretty straightforward. We're seeing a very red day, and we're actually starting to recover a little bit right now. You guys can see right here on the 15-minute candlestick chart, but overall we're still just seeing a massive down day. The first 15 minutes of trading, we've seen 6.3 million shares that were dumped. On this candlestick, you've seen 4.8 million shares that were dumped, and on this candlestick, you've seen 3 million shares that were dumped. So a majority of this volume happened in the first hour and a half, 2 hours of trading today, and this was institutional investors selling AMC. But why are institutional investors, the 20-ish% of the owners of AMC, actually selling out of their shares? What is causing them to do this? And it comes down to the simple fact of this probe, this investigation into fraud and manipulation that has been happening with short sellers. And I think this culminates into a couple things. I think on one end, a lot of firms don't want to be a part of the most public manipulated stock, right? It's not something you really want to be a part of if you're managing a fund and let's say some certain names come out that have been manipulating the stock. You don't want to be anywhere near that. So I think you're seeing a lot of people that are just deciding, hey, I maybe made some money, maybe lost some money, I could tax loss harvest, I should just get out now. So I think that is happening today, as well as the shorting that has also been happening today. But if you guys are unaware of this situation, this article says hedge funds ensnared in expansive DOJ probe into short selling, and this is basically short and distort attacks. So a short and distort is an illegal trading scheme involved selling short the shares of a company and then spreading negative rumors in order to influence the stock price downward. Short and distort is a serious crime, and perpetrators can be charged with serious fraud and subject to fines and jail time. Now this DOJ probe is more than that. It's just going over all manipulation. They're going to be looking at Citron. They're going to be looking at all different kinds of hedge funds, and we know the names here, right? Citadel, all these other big guys that have had a part in some of the things that have been happening, at least from what our due diligence has proven. It's not a question. They've been fined in the past. A lot of hedge funds actually have been fined in the past for doing this kind of activity. So it's inevitable. The names will be announced. We will know who is behind what, and institutional investors want to get ahead of that and they want to sell out. And if we take a look at this chart, you guys can see this was the June rally, 2021 June, where we did hit about 70-80 bucks per share, almost $80 per share, and then we did come back down. Well, institutional investors have been buying the stock the whole time up until what we're looking at right now, December 21st. You see this green line, this green bar that has been spiking. This is institutional ownership that has been increasing. Now that this probe has come out, it makes sense to see that buying power, or I should say selling power, heading into the marketplace because they want to get ahead of this. And that's inevitable, right? Institutional investors, they help you on the way up. They also hurt you on the way down. But like I said in the beginning of this video, it is a very good thing overall to be seeing hedge funds getting out of their positions. Not all of them, but some of them, so we can acquire more shares. Because ultimately, when it comes down to the Moass, the people who really move the stock are the hedge funds that control at the current moment $6.7 billion worth of AMC. If they want to sell out at $100, they can do that, and that's going to hurt the momentum a lot. But if we are holding on to the shares and we start to sell out at 1,000, 5,000, 10,000, you're going to see a lot less momentum kill as the price does go up during the Moass. And ultimately, I do think after this round of selling from institutional investors, this round of shorting, you will see the stock go through a mega rally. And I'm putting together a full in-depth video about this because you got to try to look ahead. And when this is done, I think it's pretty easy to see this mega rally that is going to happen. So that is the current situation. If you actually look at the 13F filings, you're not seeing anything actually being reported as of right now. I do expect over the next couple of days, some firms will report that they have sold their shares. And just another reason why you could see some selling, if some of these firms have long positions in AMC that are under investigation, then that is obviously not a good thing. They want to liquidate their positions, get their money back, and wash their hands, per se, of any wrongdoing that they have done. It will still come out, but it might take a little bit longer to actually be fully investigated if you're not currently in the stock as well. So that is my take on it. That's really why I think AMC is selling off today. This DOJ report did come out at 10 a.m. and that's really when you did see a lot of selling, but we did see the most selling the first 15 minutes of trading. So I do think these hedge funds, these institutional investors, they knew about this report that was coming out today and actually coming to the public eye. So I think they front run this and got ahead of this and just caused the momentum to continue to creep to the downside throughout the rest of the day. But we are seeing a big bounce back to the upside. We were down over 11% at one point. We have recovered about 4% from the bottom, currently at $27.36 per share. So this is not all too bad, but I do expect there to be pain ahead for AMC stock. And I know I'm not the only one saying this. I know people are going to say the Moass is going to happen tomorrow. That's where it's very important for you guys to take both sides of this equation, come to your own conclusions. That's the only reason I even watch any finance YouTube video, is not to believe what they say, but to take their opinions and really try to make sense of what they're saying, to see it in a non-biased way, to see if it makes sense to me. And then I base my conclusions or my opinions off of what a lot of people have been saying. So that's the situation, like I said, with the short and distort, with this probe that is going on, as well as the shorting and institutional investors selling out. I don't think apes are selling. Like we showed in the first video today, I bought shares for you guys live. I bought more after that. So it's not to say I don't think retail investors are selling. That's certainly not the case. And we are getting a lot of momentum right now, guys. So this is very exciting, actually, as I am filming this video. Towards the end of the day, we only have about 20 minutes left of trading. So I do think the rally is likely to continue. But the best thing that we are seeing right now is we are above $26.55 per share by a whole dollar. If we pull this out to the daily candlestick chart, you guys can see this is where I've had the level drawn out that we need to stay above and that I wanted to see a close above by the end of the day today. And for a majority of the day, we were really under $26.50 per share, or very close to that level. So now we're seeing a clean break above this, and ultimately, if after hours is good, we can make this move above $28.30 per share, which will be great. And by making this video, I do not want to see AMC stock go down just as much as the next guy. It's only what I am seeing and what some of the data is telling us. So As far as base case, best case, worst case scenario, my base case scenario, what I think is going to happen is that we will see more pressure to the downside, maybe $26.50, maybe even, go to $20 per share. That's really the base case scenario, and that's like a range because it's really hard to say on the penny what's going to happen with the stock, or even on the dollar point with the stock. But in between, $26.50 and $20 per share, that's really what I think will happen as more institutional investors are likely to continue to sell their shares. Worst case scenario, obviously under $20 per share, and the best case scenario is that we do rally starting on Monday, Tuesday, Wednesday, and then Thursday and Friday after the Fed meeting. That's going to be even more important, as we do have that big monthly expiration date, December 17th as well, after the Fed meetings, the 14th and the 15th, that we will see a bounce above the 200-day moving average, which has served as a resistance level. You guys can see right here, 1, 2, almost 3, 4, 5, 6 times we have tried to break above this, but just could not break above this. That's why the 3 things that we focus on here in these videos with technical analysis, when you're looking at charts: support, resistance, moving averages, as well as volume. So let's take a look at the volume. And for the day, we're looking at 53.3 million for volume. So the volume has definitely started to slow down. It's obviously starting to pick up right now. But overall, not a huge volume day, but a pretty substantial move to the downside. That is also an indication of a lot of shorting that is going on today. So that is the scoop. That's really what you guys need to know. As far as the overall markets, they are up a lot today. Go ahead and refresh this page really quick. S&P up almost 1%. Dow Jones up about 0.5%. NASDAQ up about 0.5% as well. Russell 2000 down a little bit more than 0.5%. So compared to the overall markets, I know a lot of stocks that I even own are down in between 2 and 6% today alone. But AMC is definitely down more than the average stock. So that's basically what you guys need to know from the technical analysis. Base case, best case, worst case scenario. Now, as far as the Ortex data is concerned, we're looking at 18.64% short interest of free float. This is an estimate. And as we do know, the market makers, the hedge funds, they use option activity to make it look like they have actually covered, and I shouldn't say legally, but report to their brokers that they have covered on their short positions, when in all reality they have not. So I personally think, and I've said this for a very long time, if you're an OG here on this channel, you know what I'm about to say. The short interest is really, in my opinion, in between 40 and 80%. I think right now, the short interest exchange reported data that we will get this next report date around December 15th will be over 20%. As long as we don't see a major bounce and shorts start to cover, short interest really is going to come out in between 20 and 25%. We're at all-time highs exchange reported short interest data with record high days to cover. November 30th, we were at 3.12 days to cover. This means if all shares wanted to be covered, it would take 3.12 days to do so. That is a very long time. That makes it very hard for short sellers to get out of their positions. And even though the stock is down today, it's actually bullish, like I said, because more shorts are taking on these short positions and putting themselves in the path of the apes. And you do not want to fuck with 4 million retail investors. This is what I say all the time. You don't want to fuck with 4 million retail investors, or apes, whatever you want to call us. You don't want to do that. That is literally suicide. So that's basically going to be all for this video. We will go over the Stocko Tracker data just briefly, and we are looking at a lot of shares that are available to be sold short, about 5.3 million, but that's stayed like that for a while now. But December 17th, this is going to be very important. We do have 325,000 calls that are out of the money, 17,000 calls that are in the money. You've seen a lot of back and forth action with this expiration date, with the calls going from in the money to back out of the money, and then the puts going from out of the money back into the money. So you're seeing an extreme amount of volume from the market makers, as well as the puts run from out of the money into the money. The market makers, they have to go out and short stock onto the open market. Well, when those puts go from into the money, out of the money, you do see buying power that happens from the market makers. And at the same time, obviously, if puts are running from in the money, out of the money, calls are running from out of the money, in the money. So that's another front of buying power as well. So we're going to see a lot of volatility, something we have said for weeks now here on this channel with AMC over the next couple of months. But really, most importantly, is January 21st, 2022. We're going to have all the fear catalysts out of the way. We're going to have all of the room and basically exuberance that we will need to see the Moass, or at the very least, a huge rally to the upside. Already for calls out of the money, 377,000, calls that are in the money 112,000, puts that are in the money 60,000, and puts that are out of the money 257,000. So we definitely have a lot of volatility ahead. That is what I think is going to happen. That is what I think is happening today with this whole situation, why AMC is actually down. If we take a look, we're still down about 7%. But all in all, love you guys. Thank you for watching this video. Let me know down below in the comment section, what do you guys think? What do you think is going to happen next week? I've seen some people, quite a few people actually talking about AMC potentially even hitting $16 per share. I don't think that is going to happen, but let me know if you think we're going to go under $20 per share. That information is very valuable to me. So like I said, hit that like button for me, consider subscribing to the channel, check out the pinned comment down below in the comment section of this video, as well as the description. You'll find a bunch of links to get free stock. Definitely check out Public, Moomoo, and Weeble if you guys want to get that free money. So that's all for this video. Love and appreciate you guys. Thank you for watching. I will see you in the next one.